Welcome to the Daily Brief, where I'll go over the highlights in the session for Monday, August 22nd, and then we'll see how things look for Tuesday, August 23rd. And if you're interested in getting more of an explanation of what's going on, please go and watch the full-length video. I go into a little bit more detail. I show a lot of charts there, and I'm just going to be hitting the high points in this particular update. So let's go back and talk about what happened on Monday. Right at the open, we had a real gap lower. We ended up going below S1 at 42.09, and we also dropped below S2, poof, right out of the bat at 41.90. As the day went on, we actually dropped all the way down below S3 at 41.43. So it was a pretty negative day. We closed almost at the low, and we ended up being down 2.14%, with volume still being below average. The technicals are really starting to turn negative right now, so we want to keep an eye on that. The markets are really impacted by inflation and interest rates, and Europe is really, they had just a terrible day on Monday, and some of their economic reports are suggesting there could be more inflation, and we didn't have any reports in the US to really work off of, so the market decided to freak out for the last couple of days. There's potentially some geopolitical concerns between the Russia-Ukraine situation. There was an assassination over the weekend that might escalate things in that area. I talk about it a little bit more in the daily full-blown video, but I'm still kind of at the beginning stages of learning more about what's going on with all that and if it will even have an impact on the markets. Earnings are still coming out, and then we still have this debate going back and forth about whether we're in a recession or not. So what are some comments? We're kind of switching back to this idea, kind of what I can tell based on what we're seeing coming out of Europe, that inflation may not have topped. Well, because we haven't had any reports now for a few sessions. We're going to get some later in the week. So, but there's that idea that inflation is going to keep coming down. That's kind of going away right now. And we'll need something to justify that scenario of coming back. Europe was really down strong, as I mentioned. All the sectors ended up being down. This doesn't really impact the US markets, but the People's Bank of China, they cut some rates there because of a weakening economy and to hopefully stimulate some growth. Our sector rotation and our positive setups, I'm kind of saying we need to put those on hold for right now until we see follow through with price. And that's just not happening, at least in the last few sessions. We've been retreating ever since testing the 200-day simple moving average. The 10 to the 2 and the 10 to the 5 still remains inverted. We're still neutral as far as sentiment is concerned. We didn't have any economic reports coming out. And our positive trend with the last two down days on Friday and Monday, it's starting to really show some weakness. It's still positive and it's still above 20, but it's a weakening trend and it's dropping below the moving average. So our bias right now is negative based on one day. And then looking back the last 2, 3, 4, 5 days, the momentum is now switched to negative. So what's our outlook then for Tuesday? The technicals, they're turning negative. Sentiment is still neutral, so there might be more room to fall from a sentiment state. We have new home sales in the IHS market manufacturing. That's one report. And services, that's another report. Their PMI preliminary reports are coming out. On Tuesday, we've got the whole list of geopolitical events. Russia, Ukraine might be getting a little bit more dangerous now, but the markets are still fixated on inflation and interest rates overall and this recession debate. So our scenarios are kind of looking at the downside because short term, that's pretty much where we've switched for all of the reasons right here, because the technicals are turning negative and we have to put our positive setups on hold until we see more follow through. We're still up. A lot of our charts are still positive, but the technicals are weakening and starting to turn negative. And so we're putting our setups and rotation and those things on hold for right now. Doesn't mean they've gone away. It just means we're not using them to justify things until we see more confirmation with price. And our technicals, although some of them are still positive intermediate term, they're really weakening short term. And we're not going sideways right now. So our conclusion then is the S&P is turning negative. Short term, it is negative, and it's already short term oversold. with many of the indicators that I go through in the video. Intermediate term is starting to weaken and could be turning negative as well. Long term, we still continue to be negative. So thank you. Please check out the full-length video if you want more of a discussion about things. Have a great day, and I'll talk to you after Tuesday's session.